So why is tax planning so crucially important to financial planning, and not just at tax time, but throughout the year? Well, we're going to give you 5 specific reasons for you to be thinking about the role of tax planning in your overall financial plan and why it is so important. So welcome on into the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're one of Central Florida's longest running radio programs. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web. So make sure you check us out there. If you miss any part of the show, maybe you are on your way to Easter and you caught part of the show, but you're interested in hearing the rest of the show. Well, that's easy. Go to our website, nelsonfinancialplanning.com, and then you'll see a bunch of icons. Click on the one that looks most familiar to you, and whether it's Spotify or iTunes or Amazon Music, whatever the case may be, we've got a channel on all of those platforms so that you can listen to our program at your leisure. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of certified financial fiduciaries that stands ready this week to help you change your life with a successful and cost-effective financial plan. So one of the things of tax planning as it relates to overall financial planning is the crucial interrelationship between the two. And at Nelson Financial Planning, we view it as just so crucial that I think it was 20 years, maybe over 20 years ago, we actually started to do tax returns, to actually prepare tax returns as a service for our clients, because it struck us that you can certainly do an approximation or an estimate of your taxes, but at the end of the day, it's kind of convoluted. I mean, most of the time you really kind of need software to kind of run exactly what the numbers might be. So yeah, you can probably get a rough approximation, but if you want to really get a finely tuned analysis, then you sort of have to actually do the real tax preparation, actually put it into a Form 1040 and, kind of see what spits out. So over 20 years ago, we would be coming up on 25, we actually started to do tax returns for our clients here at the office at Nelson Financial Planning. Today we do, I think, over 600. So we certainly see our share of all kinds of tax issues that can crop up, predominantly for folks that are approaching retirement or folks that are in retirement. It certainly pays to have on the team a full-time CPA and a full-time IRS enrolled agent make up sort of the backbone of our tax expertise. And certainly, if you're a regular listener to the program, you've certainly over the years heard Kristen Cayley and Christina Lamb kind of speak to their expertise and join us for a segment on the program. Of course, these days they are kind of busy, so we'll probably have them on in a month or so once they've kind of cleared the season. Anyway, so what are some of the areas where that tax planning and the relationship to financial planning becomes so crucial? And I guess the first area is understanding the difference between gross versus net, right? People talk about their income. They usually kind of talk about the gross number. Oh, I make 100,000, or oh, I make 75,000. That's the gross number, right? That's not actually how much they get deposited into their bank account. That is the net number. Now, when you're working, there's no way to sort of override that, right? Because if your W-2 is your W-2, then you're going to have your employer running the calculation in terms of tax withholding and in terms of FICA tax and things like that. And then voila, you get deposited into your checking account the net amount. And of course, the net amount is what we all live on. Well, that's particularly important to understand that distinction, because when you become retired, you're going to be generating out income. Well, you still need to think of that income that you're generating as gross income, not net. And the responsibility then to account for the difference, to account for Uncle Sam's cut, if you will, now rests on you. So oftentimes what people forget is they say, well, my net income is $6,000, so all I really need is $6,000, and I'm going to be fine, and I'm going to be able to replace all of my income and be perfectly happy in retirement. Except for the fact that now the burden of that gross versus net conversation has shifted to you. So that means that you've got to understand how much those numbers need to be grossed up. You have to plan for the tax man in retirement. He's got to be one of your budget items. And oftentimes we see people sort of forget that gross versus net, and how do you account for it in retirement. And so when that happens, you want to make sure that you are not sending more money in than you really need to, right? Because otherwise you're getting less money, or you're taking more out of your accounts than you really need to in order to satisfy that tax liability. So remember, you spend the net, not the gross, but in retirement, you got to account for the gross. And that's why certainly planning those taxes becomes a very crucial part, particularly when we're thinking about the retirement income planning portion of financial planning. Next up, in terms of why it's important to sort of integrate tax planning into financial planning, is Social Security. And this is one that there's probably not a day that doesn't go by where somebody says to me, Social Security, why is that taxed? Or that never should have been taxed, or that wasn't supposed to be taxed, or is that taxed? Really? Well, the answer is yes. Now, there's some thresholds that make it sort of depending upon other income that ultimately determines its full tax liability. So lower income, less taxable, and ultimately there's an opportunity to sort of take advantage of it. Now, here's the kicker, and we've said this before on the program. Those thresholds that trigger taxation of your Social Security have not changed in 40 years. They were never inflation adjusted, so they still remain for a single person at $25,000, married couple at $32,000. Here's the other kicker or secret part of it. What counts towards that threshold is not just income, but also half of your Social Security comes back into that calculation. So you can see where very quickly you wind up having to pay tax on your Social Security. But if you find yourself in that range where Social Security might not be taxable, or maybe only 50% of my Social Security is taxable on up to that maximum of 85, then there can be some opportunity to take advantage of that provision, especially if you think about it again in terms of where your retirement income is coming from. Maybe your retirement income might want to come a little bit more heavily from your Roth account, or maybe your retirement income might want to come more heavily from some of those after-tax investments that you have in order to bring those numbers down and maybe avoid some of the tax on Social Security. Again, you spend the net, not the gross. So if you can reduce that as much as possible, then you wind up with more money to spend. Number 3, and this one is one that I think more and more people are dealing with. It's still a surprise when it happens because it can be pretty dramatic, and that is IRMA. And what IRMA is basically a means testing based upon your income of how much you're going to pay for your Medicare premium. Now, the issue here that you need to be aware of is those one-time transactions where you could wind up paying double or triple the usual amount that you would pay for your Medicare for an entire year. So here's how it works. Medicare, again, means tested every single year. So every single year, let's say January of 2023, they looked at your most recently filed return, which would be 2021. So that's the 2-year gap that they're looking back on, and looking at that income and determining where you are in terms of those income thresholds. What they do next is then determine what your Medicare premium is going to be for that coming calendar year. And we'll get into the thresholds of all of that when we return here on Dollars and Cents with Joel Garris of Nelson Financial Planning.